People are panicking about a new government service that's launching next month. Presidential candidate RFK Jr. recently tweeted that the FedNow central bank digital currency that's launching in July will grease the slippery slope to financial slavery and political tyranny. If you do a search for FedNow on TikTok or on YouTube, you'll see a lot of these same type of comments. Concerned that the federal government is doing something nefarious with FedNow, that it's going to invade your privacy or worse, steal your money. Should you be worried? Let's talk about it. The first thing to note is that FedNow isn't something that the government just sprung on us out of the blue. It's been in development since 2019. That said, yes, it is going to launch next month. But contrary to what some people are saying, FedNow has absolutely nothing to do with central bank digital currencies or CBDCs. What FedNow is a new system that helps money move from those making payments to those receiving them. Think about all the ways in which you make payments today, starting with cash. You can take a $5 bill and hand it to the cashier at McDonald's and boom, money has been moved. Cash is a unique type of money. It's a bearer asset. If you own cash in your physical possession, you own it. There's no official record of who owns how much cash. That's different than other types of money like bank deposits, where some entity like your bank keeps a record of who owns how much money. Most of the money we use today is like that. It's either in a bank like Chase or in a digital wallet like PayPal. And those companies keep track of how much money we own. But what if we want to send the money in our bank accounts or our digital wallets to someone else? It's obviously not like cash, where we hand someone a physical piece of paper to transfer ownership. Instead, someone has to update the record of who owns the money. If I send you money from my PayPal account to your PayPal account, then it's PayPal who updates its records to show that money has gone from me to you. And it's the same situation if I want to send money from my Wells Fargo bank account to your Wells Fargo bank account. That company, Wells Fargo, updates its records to reflect the payment. But what if I want to send money from my Wells Fargo account to your Bank of America account? In the previous example I just gave, both my money and your money were sitting at Wells Fargo. So when I sent you money, the bank could just update its records to show that I had less money and you had more money. But when you add Bank of America to the mix, things start to get a little more complicated. In this case, the money is in my account at Wells Fargo, but I want to send it off to your account at Bank of America. How does it get from here to there? Well, it happens through something called an interbank transfer. This is when money is transferred from one bank to another, usually electronically. You see, just like we keep our money at banks and those banks keep a record of how much money we own, those banks hold money at the U.S. Central Bank, the Federal Reserve. And the Fed keeps a record of how much money those banks own. So when I, as a customer of Wells Fargo, send money to you, a customer of Bank of America, the Fed updates its records to show that money went from Wells Fargo to Bank of America, while Wells Fargo updates its records to show that I have less money in my bank account, and Bank of America updates its records to show that you have more money in your account. So that's how money moves from bank to bank, but it doesn't just magically happen. There are systems in place to orchestrate this, some run by private companies and some run by the Fed. Most interbank transfers today happen through systems like the automated clearinghouse and wire transfers. If your employer pays you by depositing money into your bank account, or you pay your utility bill by transferring money out of your bank account, those payments are most likely taking place using the ACH system. The way ACH works is if you want to make a payment, your bank creates an electronic file with payment information in it. Things like routing numbers, customer account numbers, the amount of money to be transferred, etc. And then it sends the file off to one of two ACH network operators, either the Fed or a private competitor called EPN. The ACH operator then looks through all the files that are received in a particular day, nets all the payments, and determines how much money each bank is owed or owes. Then based on that, the Fed moves money from banks that owe money to banks that are owed money. Wire transfers are even simpler. When you want to make a wire, your bank simply takes the payment instructions from you and sends them to the Fed, who transfers the money from your bank to the bank of whoever you're sending money to. ACH payments are slower but cheaper, while wires are faster but more expensive. That brings us back to FedNow. FedNow is just another system for transferring money from bank to bank. Banks will send payment instructions to the FedNow service, and the FedNow service will facilitate the movement of money from one bank to another. But unlike ACH and wires, which have been around for decades, FedNow is a completely modern system that's designed to transfer money instantly, 24 hours a day, 7 days a week. That means you can initiate a FedNow transfer anytime, and the money received with FedNow can be used immediately. By comparison, ACH payments and wire transfers transfers are only available on weekdays during business hours, and it can take anywhere from a few hours to a few days to send and receive money using those systems. With FedNow, payments are instant and extremely cheap, only 4.5 cents per transaction. So there's obvious benefits to that. If you work at a job and you get paid through FedNow, you'll be able to spend your money as soon as your employer pays you. You don't have to wait around a few days for the payment to clear like you would with a direct deposit that goes through the ACH system. By the same token, if you want to send money quickly, maybe to make a last-minute payment on a bill, you can do that without worrying about missing the deadline for that payment. So these are all benefits of instant payments, and they'll be useful to a lot of people. But maybe not everyone. Some people might not need instant payments. Getting your money in a day or 2 or 3 might not be a big deal for you. And many people already use apps and services like Venmo, Cash App, PayPal, and Zelle that allow you to send money in a way that seems instant. Like I said earlier, if you send money from one PayPal account to another, that transaction happens instantly because the only thing PayPal has to do is update its records of who owns how much money. It's only when you try to transfer money off of PayPal do you notice that these transactions aren't exactly instant. For example, if you transfer money from your PayPal account to your bank account, it usually takes a few days because that's an interbank transfer from PayPal's bank account to your bank account. But you can still get around that. If you've used PayPal, Venmo, Cash App, Zelle, or similar services, you might have noticed that for an extra fee, they allow you to transfer the money on those apps to your bank account within minutes. They do this by utilizing networks operated by Visa, MasterCard, or the clearinghouse. Like FedNow, these are other systems that help move money around electronically, but they're run by private companies. So as you can tell, the payment landscape is quite complex. You have a mix of services provided by private companies and the Federal Reserve. And these services compete with each other, but they complement each other as well. For instance, if you send money from Venmo to your bank account, Venmo sends the money to you through the ACH network, which is operated by the Fed. Or if you use Zelle to send money from your bank account to someone else's bank account, Zelle transfers the funds using the RTP system, which is an instant payment system owned by a group of big banks. And the RTP system uses joint accounts at the Federal Reserve to ultimately move money from bank to bank. So you can see that these payment systems can be mixed and matched and layered on top of each other. FedNow is just another system and building block that banks and other companies can use to improve the experience of making payments for their customers. Now, we won't be using FedNow directly, but banks will likely offer it to their customers, which include people like you and me, as well as apps like PayPal and Venmo. So we'll use it when we use our banking apps or these other apps. It's going to power the payment capabilities for these apps. So FedNow isn't anything nefarious. It's just a boring piece of payments infrastructure that's going to help us send and receive money faster. A lot of other countries already have similar systems, like the Unified Payments Interface in India and PIX in Brazil. And for the most part, they've been well received by consumers and businesses in those countries. The US is actually lagging many countries when it comes to adopting modern and efficient payment systems, so FedNow helps the US catch up. Hope that helps, and follow for more insights on the economy and investing.